Hello, everyone. This is Powercharting. I'm Bruce Frazier, your host. We're going to continue with the inflation trends theme from last week. And we have brought in our commodity market expert, Andrew Cardwell, Dr. RSI. Andrew, thank you for being here.
No, this is Andrew. This is not doctor. This is the doctor's making a house call, I guess.
Okay, all right. Well, so glad you're here. And we have seen so many interesting things happen in the commodity markets. I covered these markets last week, and certainly I didn't cover them all. You may want to cover others. And so what I'm going to do is I'm going to do just a little bit of review and encourage people to go back and look at last week who are interested in getting more detail. And then I'm going to get into some new data, new charts on the bond market, et cetera. Then we're going to turn it over to Andrew and let Andrew dissect these markets with the RSI.
I think it's not only looking at the charts from last week, look at the charts over the last 3 to 6 months and see how many commodity prices are much higher now than they were back then.
Wow, interesting. So we'll get right to that. Here is how to get a hold of Andrew, and also look at his RSI Edge course because it's absolutely fantastic. I've done it, and Andrew is really the go-to person on RSI.
Well, thank you, sir.
Oh my gosh. And so it's always just a great pleasure for me to have Andrew on the show. And so thank you so much.
And remind everybody, our job is to inform, educate, and entertain.
Your real job is to entertain me. Which you do so well.
People call me and say, you two are never serious. I said, when you study and you learn what the market is showing you, you will be more relaxed.
That's right. You have to be more relaxed or you get a little loopy in this business.
Right. Yeah. You have to read what the market's showing you and telling you what it wants to do, because it's not going to do what you want it to do all the time.
No. We have to follow the lead of the market.
That's it.
Here is an Ndx chart. I showed it last week. Some things happened that were pretty interesting, and so I just wanted to update it. We had said last week that this count here, also there was a little count here which I showed last week that counted up into this area also, more or less. And so these confirmed each other, but also early on, because I had done this count a long time ago, and this goes back to January of this year, but this count from here over, I said we may need to take that count. And so look what's happened. We have a reaccumulation here, another reaccumulation here, and this is a confirming count because look where they go. 17,200, 17,950 off this big count, and then 17,550, 17,800 off the this next reaccumulation structure. Well, this is what's happened since that time, is the resistance really just didn't even hold Ndx back here. And so you can see that it's up and out, may have to do some work over here, pause, and then potentially continue on. I love to confirm with OBV because this is a volume confirmation tool. And so this, looking at the 20 period moving average, just simple above the moving average, and what John Colucci tells us, he calls this a signal line, very simple to look at. It's above the moving average. That's bullish. Here you can see that's just what's happening here. And so OBV is pointing out that so far the trend is firmly up, and also the relative strength is firmly up. So very interesting condition here for Ndx. Now this chart, I really didn't have a chance to get into in detail, but this is the Treasury Bond TLT ETF, 20+ year Treasury Bond maturities. This is prices. So this goes back to 09. And so you can see that this low right here is the 09 low. And then a beautiful big wide upward trending channel has occurred. At the end, we had a throw over which fulfilled this count. So look at these beautiful stepping stone counts that just go up and up and have been fulfilled. Now, this has the, sort of the look of distribution in it. It's thrown over, immediately fell back into the channel, had a lower test, and now it's failing back down. And I would say as long as bonds continue to be above this, what we call the demand line, the solid line here, the bond market is likely to just continue in a trading range. But if it turns down below this, I think that's a really important moment in the bond market. And so here is a new slide that I wanted to put up and show Andrew. And this is a count that I took back in the spring for the bond market, and everybody was pretty bearish on bonds at this area. Look at this beautiful climax. And then it built this kind of a small swing trading base, and a nice point and figure swing count counted up to the highs. We showed it at the time. This is about May, June. And now look what we have. We have something that looks to me like distribution, sign of weakness. Now we have a lower high rally, which, you know, may keep going up, but here you can see that whole structure over here. So preliminary supply, climax, and then you have a LPSY here. Excuse my penmanship, and then the same here. And so this all looks like distribution now, potentially, and the relative strength is not great against the S&P. So, so Andrew, those are the updates that I have. And then here is crude oil, which I know you have a lot of interest in crude oil. And the only thing I would add here, yeah, go ahead.
I was just going to say very much so. I've been bullish since like 42.52. We're making bottoms $10 higher each way, each time.
Well, here I did a count back in January. So you can see here, January of this year, and I had wanted to count the structure. And so this structure counted at the time up to 85 to 112. And so, which is above this high here, not the highest high for crude, but an important high. And look where we are. We've actually gone over 85, fulfilled the minimum count objective. And I think that we should start looking for evidence of some kind of a pause. Maybe not, I think it's way too early to call this distribution or even to think distribution, but it may need to pause here above that high and build more count.
Well, so crude recently has gotten overextended. There's no question about that. My RSI work is the same way. You know, we've gotten a little overextended. We've had a correction this week, and I think we start back up and take out the 85.
So interestingly, crude went negative in 2020 at the lows. Well, look, this count here goes to -$3.
Yeah.
So yeah,
I've been around a long time. There's not many markets that have gone negative, but they'll bounce back with a vengeance when they do.
My God, just what happened. So I put this one up. This is silver continuous contract. I really put these charts up last week to show that there is gigantic accumulation structures that go back for years. So 2020, a spring, back to 2014, big count, and then now a stepping stone reaccumulation count. And Andrew, they now confirm each other. So that's very interesting. Now, what has to happen with silver is that it needs to get in gear and start to go up and go out of the structure to confirm. But I think that this sideways trading area is shallow, pretty dull, and stays above important resistance right here at $21. And
what were tops before becoming bottoms.
Yes, exactly.
And that's very strong.
I'm very curious about what you would think of silver on your work. Now, this is the silver miners, SIL ETF. This is a count. Now, this is an older count. I did this in February, but this count goes back to 2013. I don't believe I showed this chart last week, but this little area here is a segment, counts 118 to 134. Currently, we're in around the high 30s, I think, for this ETF. But this big count across here counts 294 to 318. And what needs to happen, and this is true for all these charts, is a must confirm by taking out overhead resistance and then getting above and staying above that resistance level. All important. But so this structure may not be complete yet, but it's very large. So I'd love to see your thoughts on silver and silver miners in your work. Copper. So copper is another one that has just a huge structure back to 07. And this is a large accumulation type structure. It's up and out. It's climbed above the resistance of 2010 and then stalled, backing up, but a very shallow, dull resting area here, did not come back deeply into the accumulation, which is a sign of latent bullishness, I think. And so if it continues to climb out of here, 530 is this little turquoise count area, and then you can see a count from this 452 area. This was on the 25th of October, counts up 2380, 2450. That's a long way. And natural gas is just the same things. You can see they all have a family resemblance in here. So natural gas is built of gigantic cause. Again, it's up into the area of resistance. My preference for these would be that they just stall and come back in for the sake of consumers. I would not want to see this, but nobody gives me a vote, Andrew. They don't let me choose what happens.
I don't have it on my data now, but I am going to put natural gas in because so many people are going to be affected by it.
Exactly. And that's the reason I look at it. I don't generally trade it, but I do keep an eye on it. And this is a really large structure with a very big count that goes back to 2009. And so, and finally, I have cotton here. And this is, look at this structure, goes back to 2012, big cyclic bottom and a beautiful accumulation type structure. Now, this one is the most mature in terms of jumping up and out. And as of this week, it got up to the area of 121, which is right up here. We did this chart on the 25th, so it doesn't show the latest run to a minor new high, but it is up and out of this accumulation structure. And I really was inspired to do this chart because of the work that you do, and you're commenting to me on cotton a number of times. And
well,
so
I think it's in my list because I saw it at those lows and seeing it come out the way it has, and then either the cotton futures or the ETF BAL, both of them are telling me, hey, this is one of the, I always talk about the 10 best trades a year, and there's 3 or 4 exceptional. So for me, it's cotton, silver, crude oil, commodities in general with a big capital C, because I think we are going to see super inflation like we saw coming out of the 70s.
So here you can see this is a huge, what we call a catapult wall, huge column of X's that went right from the low, a spring low, up to resistance. Then the consolidation was really tight and dull with a series of higher lows. And then it just popped right out of here. And look at all the volume on this catapult wall. So the huge amount of demand that drove it up and then out of this structure. So lots of room to go higher here, currently around 122, and it was around 108 when I made this chart on the 25th. So,
yeah,
and then
wouldn't be surprised to see 125.
3 markets that we have talked about in the past: sugar, well, 2 really: sugar, coffee as measured by JO, the ETN, and then also coffee continuous contract futures. And so I just put these up so that you can see these counts. And there is a large structure. This counts, this goes back to 2015. This goes back to 2013, 2012, I guess, actually. And then 3 segments are counted here. You can see how high this goes Currently it's around 2. And then JO is the coffee ETN, and there's a big structure back to 2019 in Joe, and that counts up, has a nice higher count from here. And look at
Yeah,
how bullish.
we just picked up some more Joe yesterday. And for the futures traders, more December futures, and we'll go out to March or May, because this is going to be these two. Sugar's been a little slower, but these Joe and crude oil and cotton are my 3. I don't like to have favorites. When I call something a favorite, it's because it's based on the technical structure. And for those 3 markets, they're going to be prime markets to be in going forward.
So let's pause here, and we're going to turn the screen over to Andrew, and he can show us some RSI. Hang on just a minute. Okay, so now we have Andrew's charts up. Andrew, what are we looking at?
First one I want to share is the crude oil, and I want to start with the weekly. You know, I have these range rules that I've taught in the class. It's not 70 and 30. Bullish ranges for RSI are 80 to 40, and the bearish range is 60 to 20. And I do that because I kept the same. I even told Wells Wilder when I first met him that I did not change the formula. I did not change his 70-30, but then I started to realize that bearish divergence is just an overextension. It's not a reversal. And I kept the same 40-point range because I'll show you examples to where the market rallied, pulled back to about the 40 level, and then went all the way up to 80. And when it was toppy, it got up near 80 and it sold off back to the 40. So I kept the same 40-point range and just established 80 and 40 as uptrend ranges or for uptrends, and 60 and 20 as the bearish range for downtrends. This first chart we're looking at is going back to April of last year when crude oil was so low. We had a little bullish divergence at the bottom. The RSI came down to a low of 20 right here. And if you notice, this CFG, which is my bottom chart, is something that I developed back in the late 80s, early 90s. It's based on RSI. It's a way of looking at momentum in RSI to where it's a little bit more sensitive, but it does show bull and bear divergences. There's no limit on it. That's 0 and 30. So it can get down to numbers like right here, it's -3. Over here, it was -29, but it was a bullish divergence. And it also showed in the RSI, and they started up, and I use moving averages on both. But as prices started up and got back above $30, we see the sell-offs were only coming back to near 40, 39.5, 40, and it took out 60. And when a moving average takes out 60, that's the moving average 9 of the RSI, then it's what I call initial upside acceleration. The same as if it dropped below 40 with the moving average, initial downside acceleration. But look at how much time that 9-period moving average of RSI stayed above 60.
That's interesting because that's just about the area where the point figure count was completed, was right in that mid $50 level. And so the acceleration began after it completed that count and started to mark up. And you're seeing that also using your RSI methods. That's fascinating.
And it had a longer term bearish divergence from these highs. Each time we've been higher in price, but the RSI hasn't taken out the previous high. I mean, the previous high level in RSI, no new high. But when it pulled back, didn't even get to 40 before it turned up again. Now that top chart is a 9 on close, the green line, and the blue line is what I call my number, which is 4 moving averages that I've done on highs and lows, 2 short term, 2 longer term. Basic guideline, 9 above 45 or 9 above number, RSI moving average, 9 above 45. You can see it's just, they're still pointing higher. And on that pullback, that was at $61. The previous low here was 62, but this low was 57.5 roughly. So it's like $3.5, $4 in difference. And I say, all right, the market's more overextended here as it was in CFG as well. Lower CFG value, higher price. And look where that close came in. So we came back and tested it. So that's 57.5 to what, 61. That's $3.5. And I added to the high close I had at 73. So 3.5 there gives it 77.5, 78. And we've already cleared that level. So now we're starting to see what were tops before are becoming bottoms now. So this is still very positive. That's weekly. And then when you look at the daily is showing the same type of action to where it wants to go higher. And even more acceleration. Because ever since the end of September, all of October, it's been just about straight up. And it's interesting when you can put a moving average on close, whether you use 90 or 20, which is 4 weeks, to see all the closes. There's dips below that line, not too many closes. You don't see closes below that line until you start to see a little bearish divergence. But this just looks corrective. CFG is already overextended.
Now, what would you expect to see in the RSI here if this was, we've hit minimum count objectives in the point figure work, 84, right. And I do have counts up to 112, so it certainly could just keep going right to that level. But what would you look for here?
I think we're going to see 100 by March. The positive reversal patterns, like I just showed an example, that sets targets. When you clear that target on a closing basis, it becomes a future support level. And then we have previous tops of support levels. But I think I just bought some more XLE yesterday, the ETF. What is it? JO, Cup of Joe. And I got into some XLEs because I still see this is one of the strongest ones. This previous chart was a weekly. So we got up to the first objective, cleared that above 81, 83, 84. Little correction's not going to damage it. We're going to just, people taking profits, and the people that missed it will be ready to buy. But I think we clear 85 and we should see 100 in the cards. And if we clear there by March, we may even see 130 to 140, or even possibly 150 again. I've been around long enough to see 150 in crude oil, and I've seen it go negative. So I've seen both sides of it. But it's still one of my best trades for the year. As far as I look for about 10 really good trades a year, but 3 or 4 exceptional. Coffee, crude oil, sugar, cotton, and silver seem to be real front runners right now. And going forward, they're still going to be moving into the new year. That's why I said until March. I would expect a lot of these trends to continue until March. Coffee, I think coffee is my favorite, because one of my favorites, and I say favorite based on the technical structure. But this is a daily, and you can see we've been to, recently we've been to 210 back in July. So that's going to be a near-term resistance level. But when it gets through that, I can see 250, 260. I can actually see it going above $3. And you don't really get even down on these sell-offs. We only got down to 183, and the RSI never got below 40. So it starts up again. What I pointed out on that first chart, look at that green line, the 9 moving average of RSI. It hasn't even broken 60. But you can look at where it is now. We start up next week. Finish this week strong, and into next week, that 9 will get above the 60 level on the RSI and say we're into acceleration.
So that would be the thing that you would be looking for here, would be that green moving average getting above the 60 level to confirm emergence of a new acceleration trend.
Yeah, I still see this very strong, and I don't see any reason to change it. And even looking at the weekly, You'll notice the weekly RSI has done about the same thing.
Mhm.
The weekly RSI has already gone above 60. It went above 60 back in June. Had a little pullback, stayed above 60. And one thing I like to look at is when I see a monthly close, a daily, a weekly, and a monthly close all on the same day. It's like, friends call and say, let's meet for a drink. I said, not till I go through these closes on a Friday and see them all finish on a Friday, because you're looking at one price in 3 different time frames. Look at the structure of this RSI. A rally, a pullback. A rally, a pullback. Look at where that 9 is. It's crossing the 40 level. And it's in the process of the 9 I use up here, 9 on close above the high line moving averages, high-low lines. And the RSI has gotten up to almost 70 on a monthly chart. That means that 9 of RSI is probably going to stay above 60 for a while and support this longer term uptrend. What was the other one you asked? The coffee, the cotton. We didn't do coffee yet, did we? No, this is coffee. I'm sorry. The JO.
We could go to cotton.
Oh, cotton. I wanted to mention cotton too, because that's a bad boy. It's that monthly looks exceptional. Look at your 9 of RSI. Just went above the 60 last month. It's starting to move up. The CFG come back, and think of CFG as a more sensitive RSI. It come down and bounced off its 45 period moving average down here at the bottom. So that's still strong. And
so now that this, like on the monthly, this is becoming somewhat overbought at 75 on the RSI. Overextended. Your term.
Yeah, I never call market overbought until I get sell signals, and that's based on.
So what would you look for here with this current setup? Would this be confirmation of a continuation of the uptrend, or would you be looking for some kind of a pause in cotton going forward? Because it does look a little climactic here on the monthly.
Well, on the monthly it is, and you could have daily and weekly corrections. Intermarket or intraday corrections. A lot of time on a strong bull trend, the market doesn't correct and sell off into the close. It corrects during the day, and those who missed the trade jumped in on it. So I don't think we have a lot of downside. I can see probably 120 as maybe near-term resistance. We maybe correct back a little bit, but I still like the cotton, and the ETF for it is BAL, B-A-L. That still looks good. But the RSI, even on a monthly up here, the RSI got up to over 70.
We are now in overtime with Andrew Cardwell, Dr. RSI, and he's going to show us some entry strategy using RSI relative to these commodity markets and just tactics in general. Andrew, what are we looking at?
It's overtime, so we're going to try and pull this together and win the ball game today.
That's right. It's sudden death.
Sudden death, sudden quickness. It's over quick. Okay, going back to this crude oil chart, we've had the divergence. We've got a bearish divergence. That is not a reversal sign. Remember that. So many people explain bearish divergence as a reversal or bullish divergence. They're just overextensions. Market needs to correct. People are taking profits. My base case is you trade in the direction of the moving averages. If this were a 9 on close and a 45 on close, which is my basic, those two moving averages say the trend is up. Look where the RSI moving averaged. The 9 went above the 45. All right, so you have a well-structured trend that went up into an overextension and is going to correct. Where are the previous highs where we talked about tops becoming bottoms? That momentum high was up here at around 78.25. The market's usually going to sell off if it's in a good trend. It's going to sell off to levels that were previous resistance levels or support levels, and find that as support. Be able to look at where it is now. We're seeing it pull back. The correction was necessary, and we're probably looking at, a couple more days, maybe a little bit more of a sell-off. And then where do we get in? Well, previous support was there. Previous low close in RSI was here at 76.28. I don't know if we're going to fall 4 cents, but what I like to do is let it pull back, play out its divergence. Here's a rally attempt after divergence. And it started down, which meant it was meeting some overhead resistance that people were probably going to start taking profits. This trend is still up to me. So I'm watching for lows to come in. I'm watching for support at the 45-day moving average, which is at about 78. But I'm actually waiting to see, when I want to jump on a market, I want to see it move from a bearish condition into a more bullish condition. So let it pull back maybe a couple more cents. I use pivot points. I talk about pivot points all the time. Taking the high, low, and 2 times the close divided by 4 will give you a pivot point as a center. Watch to see how it is around there. I put the line on the chart for the pivot points. But now we're seeing the RSI has come off a bit. I want to see it hold, definitely hold that previous close. I want to see if I have a pivot point somewhere around, I don't know, 80 to 79.5. That's going to be the first support. That's yesterday. Maybe we go a little lower to around 78.5 to 79.
Now in the RSI, you have range rules 80-40 in a bullish uptrend. So we're
at 51 as of now.
Is it possible that we could get down to that 40 level on the RSI?
I don't think so, because the structure of this is too much acceleration to the upside to say we'll have much of a pullback. Sometimes, I talk about the 40 level. Maybe it comes down to 45 and turns up. That's indeed the 40 level is the key support, but if it only comes down to 45, I'll tell people, if you can't get below 45, you're probably not going to get below 40. And that's to have the information in the brain that, hey, this is stronger than I thought. It never even pulled back. I have no rule after 40 years of trading that says I have to wait until it hits 40. I may miss that entry.
I love the way that you're always looking for confirmation of the larger primary trend.
Right.
And that all your tools are oriented towards identifying strength, and then when strength is ready to reemerge or continue. And this is what I think is so unique about your approach to RSI.
Well, it's a leading indicator. People say it's just an oscillator between 70 and 30. And I say there's a lot that happens between 70 and 30 to tell you that it's not going to go higher or it's not going to go lower.
Yeah.
I mean, my course turned out to be like 325 pages and 22 hours of lecture. And people tell me, they said in a conversation, I still learn more. But when you have a market that's super strong, you want to stay ahead of it. You want to say, what if it does this? What if it does that? And let the chart show you. Is it confirming that this is still in an uptrend? That's why I use moving averages on that chart I showed with the bands. I take moving averages of highs and lows. And I see if where prices fall above or below those lines. But in the case of something that is this strong, look how long the RSI has been above 60 since September 23rd. And then the moving average has been above 60 since September 29th. So it's been over a month and this RSI is still above 60. so's the 9 and even the 45. So I just watch for an entry to where it pulls back, find support at a previous high, or use these pivot points to see where the pivot point is. Because as long as that pivot point is still running, I showed that on that other chart, it's staying above the 9-day moving average. It's still trending. But I've had students of mine that have been with me 10, 15 years. They'll look at the close, see a close something like today, and be watching for a pullback, maybe a little bit more tomorrow, but also aware of the fact that it could turn up from right here. So maybe they covered half their position on the long side with the bearish divergence showing. They want to get back in. They know they want to get back in below or 82, because now you have a little bounce. It met resistance, that it's coming down a little more, so you're a little more patient. And then you start watching for previous support at these lows. Like I said, they were down at 76, but I don't think we're going to get that low. The next day was a pop up, and that's at 78. So I'm looking at 78 to 79 as a potential pullback. So
And
this
that's
may have
about where
one more
the
day to the
moving
downside.
averages. Yeah, the moving average is about at that level.
Yeah, and the moving average on RSI is more sensitive than the moving averages on close. So I have guidelines. If they're both 9 above 45, trend is up. Moving average on close 9 above 45 and 9 below 45 on RSI means sideways to up, because it's being a little corrective.
So you were
So
going to show us entry strategy on one other market here in the time that we still have.
Okay, how about cotton? No, cotton's another one to pull back. Maybe it pulls back to the 9. I still think we will get a little, good size pullback, but then we're going to blast out of it and take out those highs, because this divergence is being formed over here is longer term, but I think that divergence is not going to show up until we're probably above 120, maybe 125 on cotton. The one on coffee. Every time that RSI sells off and yet the moving average is 9 is above its 45, watch for it to be support, watch for an entry to turn it back up. And especially this little blue bar here. This is what I call my price close support point. The day before is a good support level because it never closed, it never went under the previous close and closed up for the day. So that becomes a support level. And you can see when that line is drawn into the future, it actually come down and bounced off the number, and which would be similar to it bouncing off the 45. But the actual entries, this is a long-term up. The cotton's a long-term up. You watch for support levels to hold. And when they hold, then you can enter the next day. After that close holds, try and get it 50 to 100 points down. Or use these pivot points to see where they are, see what the pivot low is. And I'll help anybody that needs help in any of this. But being a trend trader, being mostly a position trader, people say, what about the hourly? I said, the hourly is going to be influenced by the daily, which is influenced by the weekly. So you don't have to rush into anything. Let the market show you what it wants to do. But please remember that those range rules, the direction of moving averages, they'll help you read a chart. And that bull and bear divergences are not reversal patterns. They're only extensions one way or the other. But identify your risk first. Where am I wrong? If it closes below here, I'm wrong. That's where your stop should be. If it sells off the next day, does it go under the previous close? Here's a close to look for, 204. It was a move up from a low with the RSI. It moved up and stayed up. Now a little bit of a correction today. So using 199, almost 200 as one level, and using that first close bounce was at 204. So do I think it's coming back to 204? I doubt it. This is even on a daily. This is more sideways to up. But be
All right,
patient.
Andrew, that's an excellent place to call it a session, but you were fantastic. And thank you for giving us time today to talk about these markets and on tactics and strategy for how to use RSI to enter in to these markets as they get ready to extend their trends. So
I always tell people RSI is much more than just 70 and 30 and bull and bear divergences. There's a whole world. And people said, yeah, a whole new world to what you referred to as Cardwell RSI or RSI Edge. And I said, well, the Edge is seeing 40 years of charts and seeing what they do.
Well, Andrew, thank you so much. And we appreciate your incredible knowledge on these concepts. And
we always have fun.
And we can't wait to have you back.
Well, I can't wait to come back because I think some of these markets are going to surprise and even shock some people as to what they'll do. Inflation is, as I've said all along, it's not transitory. It gets bigger.
Well, thank you, Andrew. And don't forget, everybody, next week I'm going to start a series of two-part series on workshops on how to construct point and figure charts. So it's going to be a blast. And so we'll see you next time.